The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 4th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we get to find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too early. 877-927-6648. Of course, internationally, you can call in at 727-445-1044. We'd love to hear from you wherever it is you are at. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have pretty much a flat market. You've got the Dow trading down 7 points. 18,347 is the number. You've got the S&P that is really up 37 pennies, so it's trading at 2164. NASDAQ Composite up 4 points, 5164. Russell 2000 up 3.5 points at 1216. The DAX closed up 57 points. The FTSE up 105. You've got gold trading up $4 at 1368 and change. Silver is flat at 2048. Light sweet crude, on the other hand, another day to the upside. 41.87 is what it's trading at. That's another buck on top of yesterday's gains out there. I'll need to reset my charts. I see I haven't done that for a while here, so I can't tell you who really is the leader dollar-wise to the upside. Looks like it's Priceline leading things to the downside at $24 to the downside, about 2%. Regeneron Pharmaceuticals off 3%, about $13. Henry Schein down about $13 as well. That's 7%. But let's begin. So with the flat day, is there anything for us to be able to determine what the market is doing? Is there any information? There's always information. The message, the market, the role of the market. Couple of roles, right? It's about price discovery. It's always about painting signals. Japanese candlesticks would be one of them, but always painting signals to give you and I great indications of what the market is doing. We just have to look for those patterns that are out there. The patterns that look like, to me, and I'm just drawing these in on 120-minute charts, but you can draw these in on different time frame charts. But the pattern that it looks like to me that we are in this marketplace is a nice little rising price channel. Now, this is the NQ. This is the NQ futures contract. Again, 2-hour charts are what we're going to start by looking at here this afternoon. And you can see along the bottom here, nice little rising price channel. You're going to see a number of different tools that are on this system. You're seeing the TAS market profiles. In my case, you're going to see on this set of charts here, you're seeing some red dashed lines and a reading to the right-hand side at 47.15.33. That's for the NQ on a 2-hour chart. You see 47.07.63. That's the blue line, the point of control. And the black line is support for me. Now, what I'm really having you focus on, though, excuse me, is not those lines. Instead, it is a nice little rising price channel along the... Now, the body of the candle is the essence of price. When we take a look at Japanese candlestick charting, we're only looking at the bodies of the candle. So is that where Stevie gets it from? Yeah. Now, that's not to say that we don't use the wicks, because you couldn't generate a hammer candle or shooting star without the wicks, but it still is the body of the candle, and it's really the formation of that body of that hammer candle that can also help us to understand the real power within inside that candlestick. But right now, what we're looking at, as you can see, we had the NQ move up, found resistance here during the last hour. Where? Found resistance right at the top of that rising price channel. So this is great for intraday traders. It's great for all kinds of traders because now we know what the market is doing. Now, does that mean if price breaks to the upside and breaks above that rising top, so that's a breakout? Well, no, because it's already moving to the upside out here. At least that is certainly the way that I see it. In the case of the NQ, if we were going to draw a trend line, well, shoot, that trend line was broken a long time ago. We're not even going to draw that trend line to the downside because there's not really much of one out there anyway. So if on a pullback, where's price likely to head to? On a pullback right down to the bottom of that rising price channel out here. So don't let it get your skirt in a tizzy. That would just simply be normal. Those are the patterns that are in play inside of the market. This is the NQ we're taking a look at. Now let's go take a look at the ES Mini. In the case of the ES Mini, here's the 2-hour chart. Again, a similar rising price channel. In this case here, we could draw a trend line. Let me just do that here. I won't draw the channel line, but here would be the trend line that I would draw along that blue diagonal line. And we can see here that the trend was broken at 4 o'clock yesterday afternoon. Right, so that descending price channel, or well, I haven't drawn the channel, but that descending trend channel is what I'm going to call it at this stage here. The top of it was broken yesterday afternoon. So what does that say? That says that prices, until we see price break to the downside, right, close below that rising price channel. Those are the blue diagonal lines from lower left to upper right. I'm going to get rid of this trend line out here. This is the pattern that we are in. So it's really great for traders, intraday traders. You know where your resistance is. You know where you can go ahead and sell the market. You know where your support is. In this case here, it looks to me like the ES Mini wants to pull back to probably about the 2157-ish type level, 2158, somewhere right around there. That would be the bottom of that rising price channel. Maybe it spikes down a little bit lower out here. That's always a possibility. But here is the market that we are in as we speak right now. This is what I would consider to be probably the best pattern for what the market is doing, and whether or not it's just going to continue to gradually move to the upside or whether it's going to go ahead and finally bust it out to the downside. I don't know the answer to that as we speak. What's more important is to be able to identify those channels and trends out here and use your other set of tools to help you to determine when to enter, when to exit. Then you'll be a whole lot less frustrated, right? The reason we want to do that is because when we see these little sideways horizontal trading ranges, you want to catch those as soon as you can, because those can be the trading patterns that are the most aggravating out there. And they're aggravating until you catch it, until you see what the market is doing, right? Market's either moving sideways, moving higher, moving lower out there. Sometimes maybe a combination of two, depending on the channels that you're in. And speaking of channels that you're in, what we're looking at here is really the weak link, right? This is the weak link where you and I are going to anticipate that we're going to get the most amount of information with regard to what the market wants to do. Now, in this case here, because the Dow formed its top on July 20th. Now we're looking at the Dow futures contract, the 2-hour chart out here. What we can see is a very clear descending price channel. Those are the red diagonal lines from upper left to lower right. Yes, we can see a clear break, meaning price moved below that descending price channel. But I really like the number of points of contact that I have where those lines are drawn to the downside on the bottom here. And we can see that price got above it yesterday at about 2 o'clock in the afternoon, just as we were going off the air. So very likely what the Dow futures are trying to do. Right now you can see they pulled back to their little blue diagonal we'll call it a sub-correction channel at this stage here. We'll see if this level holds. I anticipate that it will, and then price ought to head up. We'll talk about it when we get back to this break. We'll finish up taking a look at this 2-hour chart for the Dow when we get right back. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show. We're taking a look at the 2-hour chart right now for the Dow futures. And the reason that we're spending so much time on the Dow or the Dow futures is because, that is the weak link inside of the market. And to answer the question whether or not yesterday or Tuesday, I should say Tuesday about 2 o'clock in the afternoon, whether or not that was the buyable bottom in the market for the late summer move that could take us to higher prices through September, is that I really believe that first signal comes from the weak link out here, the Dow. So that first potential signal, in my opinion, would come if we see a break of this descending price channel. So even if this little subcorrection, which is the blue diagonals, lower left to upper right, price little channel that we're in right now, that just, to me, says we're going to boing, that is a technical term, boing around from this little rising price channel all the way till we get up somewhere into this red line. Now, I don't know where that's going to occur. Just because we've got X marks a spot at about 2 o'clock in the afternoon tomorrow, I'm not at all suggesting that that's the deal. We just simply want to watch to see what happens as price, should price, in fact, get up there and break out. If we do break out above it, then we want to be able to take a look at some other signals to see if we can get some what do we want to take? We want to see if we can get some confirmation, right? Some other confirmation. One of the ways that you do that, one of the ways that I do that, I don't know how you do it, but one of the ways that I do it is I always like to just simply go up to different time frames. Right, so we were just taking a look at a 2-hour time frame. If we take a look at a 5-hour time frame, what we do know about the 5-hour time frame is we had a nice little seventh wave move that came in at 2 o'clock in the afternoon a couple of days ago. And we've seen a nice little bullish or reversal signal that followed going into 5:15. Nice little piercing candle. At this stage of the game, we can see some support at Stevie's red line that had really acted as resistance. That is priced out at 18,257 as we speak right now. As long as price trades above that message there is that price should continue to rise. You get a close below that. Hey, it says you go back and you revisit that seventh wave move at this stage here. We can also see we've got our TAS market profiles for the 5-hour time frame, and price hasn't broken out to one side or the other. But remember, we were taking a look at the descending price channel. In this case here, a close above 18,350 would be very bullish for the Dow. Whether that happens or not, I don't know. What we do know is we know the patterns that we want to pay attention to. Why would we even suggest? There are many reasons. Why would we even suggest that the Dow might be forming a bottom? Now, and I'm going to answer that question, I think, more so I'm going to fill in for Tom from 3 to 4. So, and I don't like to repeat things between shows. Then it would be boring for you. It'd be really boring for me, but it would be super boring for you. So I won't do that. But I will answer that question, or I'll at least answer more of that question during that 3 to 4 o'clock time frame out there. But if we take a look at the daily chart here for the Dow, maybe some of you picked up on this yesterday, but as we take a look at the candlestick signals to help us, and this is great for both bulls and bears, because the Dow has been the weak link out here. And yesterday, what the Dow futures contract did was it formed a hammer candle. Now, the beauty there is that's an indication that the market is trying to hammer out a bottom, hence a hammer. Did we have any pattern that completed down there? Yeah, there were some A to B equals CDs. On the daily chart, you'd really be stretching it to find the A to B equals CD pattern out here. You'd say, what would it look like? Oh, it could look something like this from the July 20th top. You'd probably come down here to what day is that? Maybe the 25th, and then up for a day. So there's your 1 to 1.272 A to B equals CD pattern out there. You got the hammer completion, so that says, okay, bottom is in, or certainly bottom could be in. But the nice thing for both bulls and bears is it closed below yesterday's candle, not that seventh wave from a couple of days ago. By the way, the price point, I know you're saying, well, what was yesterday's low inside the Dow futures? And I would tell you, my system will let me tell you, that is 18,188. So that's really the number that you want to go ahead and write down, because you close below a hammer candle. You know the expression, if you're long, you're wrong. And in this case here, there's really not a lot of support. Now, when I say there's not a lot of support below, that assumes that price is able to bust below this big, huge, excuse me, this big, huge bearish engulfing candle. Because old resistance, which is really what that is. Now, this is the June 24th candle. So remember, it's a daily chart that we're looking at. And boy, that by the way, that price point is actually 18,025. So if that hammer candle is broken, watch the 18,025 level. That could act as support. If it were to fail as support, then you've really got nothing other than price making a retracement, whatever that 0.618 retracement, or just simply headed back into the June 26th, June 27th, June 28th set of candles back there. But at this stage here, we know what to be paying attention to, what to be looking. So that's why it's a beauty with regard to, my opinion, it's a beauty with regard to what the Dow actually did yesterday in order to be able to generate nice messages for you and I over the course of the next couple of, over whatever period of time it takes for the Dow futures contract to go ahead and give us more information out there. I forgot to restart this system here. I'll make sure that I do that during the next break in a couple minutes. Okay, so we've got that. I haven't checked my emails, but I do see someone in the den, Dizuga. Did I pronounce that properly? Says, hi, Steve. Do you think it's platinum tapping? I would think topping at this point, or will it have less to the upside? And that's a good question. So let's see. I don't take a look at platinum that often. Let me first see here. I don't know if I've got the current contract up on my other system, but Dazuga, I want to take a look at it. I do have the continuous contract, so I'm going to throw that up on one side of my screen out here, and I'm going to put this up because this is going to work for us. Now, I don't know, is there a delay? So you got platinum trading at 1164.20, and this system I got at 1165.30. So just a slight little delay out here. And here is what we know about platinum. One, it had been moving higher with less relative energy. That was all the way up until about July 29th, and then it's been able to make some higher highs. Now, on the pullback that you saw today in platinum, and I'm assuming that, in fact, you go ahead and you're saying PPLT is the ETF. Yeah, I would rather take a look at the actual contract itself. I mean, we can take a look at PPLT, but this is going to give us better information. I don't think it's a real problem for me to go ahead and use the continuous contract here. The number that I want to give you, so the question was, is platinum topping? If I think I understand the question correctly. So let's just take a look at a couple different things. Let's take a look at the wave up from June 24th. It's only in the second wave to the upside out here. So no signal there of a top. The earliest possible, so since it sounds to me like you're looking for a top, the earliest possible top that I could then call would be for price to close below Stevie's red line. And that's priced out at 11.50.10. 11.55.10 out there. And today was basically a move down to test that area. Did it get down to 11.55.10? Remember, this number
Wildlife
changes.
rescue workers.
Whoa, that was interesting. Maybe you didn't hear that, but I certainly did. In any event, the actual low today, 11.56 out here. That's close enough to 11.55.10, is it not? So all that Platinum did today, whenever it did early in the morning, maybe about 3:30, 3 o'clock or so, I'm assuming, all it did was come back and test support. So you don't have a signal just yet. Daizuga, PPLT, I'll give you, just in case that's what it is you're trading, I'll give you the number on that. And that number would be 110.54. 110.54. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks, that's still really a flat-ish market out here. If we look for clues around the globe, just to get a feel for, what's going on, yeah, it did have the FTSE up 105 points, so nice candle session there. Inside the DAX was really a little doji candle, so a bit tired. If we do take a look for clues, though, we just don't have them. When I say we just don't have them, we're looking at Stevie's red line out here. The easiest way to interpret the line, this tells you which side of the trade to be on. It says if prices below that, says being on the long side of the trade, from a daily perspective, that's what we're looking at, is likely the wrong side of the trade to be on. Now, if you had some type of bottom out there, it's a whole different thing because it's going to be a little bit of a lagging indicator out here, but it's a really good lagging indicator. And as we take a look at what price actually did today inside the DAX after the Bank of England, went ahead and cut interest rates out here, the DAX rallied right into resistance, Stevie's red line. The FTSE, in essence, did about the same. It closed just below the red line, never actually touched it, but in essence has not busted to the upside. Doesn't say that it won't, but it actually didn't. In the case of the Nikkei, price is trading below Stevie's red line. In the case of the Hang Seng, below Stevie's red line. In the case of the Shanghai, below Stevie's red line. So markets around the globe out here right now are in a at least a retracement, to potentially correction mode. We just simply can't rule that out. I'm not going to rule that out as we speak right now. I think the market isn't giving us really strong messages. Well, I take that back. It is giving us strong messages, and there's strong information to garner from from the patterns that are out there. And I'm going to cover more of that during the 3 to 4 o'clock hour. So I'm going to just go ahead and steer clear of that right now. But at least we know what's going on or what's not going on around the globe. Now, if we were going to take a look at, what else should we go look at out here? Since I don't have any questions that I know of, why don't we go ahead and just simply take a look at some individual stocks here for the next 6 minutes or so? Why don't we do that, just get a feel for what's going on there, and then I'll think of something else to go take a look at. So with regard to the stocks, I did go ahead and reset my system. So it's actually Americo, U-Haul, U-H-A-L, not U-Haul, but U-Haul. It is U-Haul. How about that? So it is the U-Haul company out here as we take a look at it. Oh, that's good, Danny. I'll do that during the next segment. We'll take a look at the yen, and we'll take a look at some correlations between the yen and what's going on inside the market. So thank you for doing that. If we take a look at I guess it's the U-Haul company, U-H-A-L is the ticker symbol out here, moving down with some pretty good volume today. And now it actually is broken. Looks to me like it's broken a bit of a little trend line out here that was coming off of the lows here from February. Volume today to the downside so far, and this is big volume for it, only 103,000 shares, but nonetheless, it's still pretty decent volume for U-Haul. Looks to me like this is going to move down into the 355.81 level. That would be my next bet. That is the bottom of its weekly TAS market profile. We can see that the brand new weekly profile that formed 4 days ago formed below the previous weekly. So that just was suggesting to you early on that there was selling type pressure inside of it. So this formed before we saw U-Haul move to the downside today. It's a pretty decent move to the downside. Dollar-wise, it's off about $27. In the case of Priceline, if we go see what it's doing, not much. Really, what we know about Priceline is we know that it's up against resistance. How do we know that? Because gaps are our friends, is what I really should say. And this thing here had gapped down to the downside June 24th. Volume there, 3 million shares. Price made it back to that open window. That really means to the bottom of the gap. That means on a gap down, you're looking at the low of the previous session, which was June 23rd. 1371 is the number. Yesterday, you got up into that area. You got up into that area with a total volume of about 861,000 shares, which is not bad. But when you consider that I was just really going against 3.1 million shares, that still is resistance. That is inside of Priceline, PCLN. Also moving to the downside, let's take a look at Regeneron Pharmaceuticals off $11. That's 2.5%. This thing looks like this has had a wild ride. Today is a key reversal session, a bearish engulfing at what looks like the end of an A to B equals CD pattern. Let's go take a look at it. Your A point inside of Regeneron was down here on June 27th. Your B point out here on July the 11th. Shallow retracement just for a few days. Yeah, it formed a 1 to 1.618 A to B equals CD pattern. Gives you the bearish engulfing. I'm assuming well, I can't assume. Assuming that it does close like this today, you would then have a bearish engulfing candle at the end of a D point, and that would suggest a pullback. You would say a pullback to where? Well, the first pullback ought to take you down to the bottom of its brand new TAS daily profile and the top of its weekly profile. It's been around for several weeks, since the early part of July, so nearly a month, over a month out there. That says that price ought to be able to find support, even though it's giving you a nice little sell the D point, so to speak, around the 408. 408 to 406 type level inside of Regeneron Pharmaceuticals. Ticker symbol there, REGN. Let's not neglect Henry Schein out here, HSIC. Down 13 bucks, 7% with big volume behind its move. What is its message? Well, it's just taken out a swing point from back here on June 27th that had 734,000 shares already. 1.1 million shares traded. So where is this headed to next? Because in essence, it's broken through all kinds of support. It looks to me like it's headed right down here for this breakout day of February 10th that had 1.3 million shares. You're 1.1, so it's coming into that area. By the way, that's 159.26 to 148.74. Again, ticker symbol there, HSIC. Now, let's take a look at some things that are moving to the upside here. Let's take a look at Biorad Labs. BIO is a ticker symbol of nearly 11 bucks. That's 7%. Looks like on their earnings out here, and this has taken out a B point of an A to B equals CD. That had 89,000 shares. You've already done 240. So what does that give us as a price projection? Well, our A point on this lightning bolt pattern is going to be all the way down here on January 20th. We're going to take a look, and this is a large A to B equals CD. Your June 8th swing point is going to be your B point, your retracement. That took us down into June 27th. And the uno to uno, the one-to-one, gives you a price projection of 163.90. Your 1.272 more likely is the number it will be targeting, is the 171 area. If we put this on a monthly chart, where does that take us to? Oh, everybody in this equity is having a party. So looks to me like the level where this is going to head up to is, well, shoot, oh, there we go, is the 1 to 1.272 A to B equals CD, about 171.52. Ticker symbol there, BIO. How about Jack in the Box, JACK? That's up $9.75. I seem to have still, not that I eat too much fast food, because I really don't, but I have never eaten at a Jack in the Box. That tells you what I think of. Well, first tells you what I think about fast food, but even less of what I think about Jack in the Box. Well, what do I know? Right now, what I do know is that Jack in the Box is threatening a swing point from back around August the 5th that only had volume of 1.3 million shares. 98.26 is the number. So a nice wide-ranging bar, because you and I were going to color in that gap, right? Gaps are our friends. They're wide-ranging bars to the upside or to the downside. And you've got to trade at 97.51. So Jack in the Box is performing muy bueno, very well out here. Its actual all-time swing point high is what it's dealing with. That was on the trading day, it looks like here, of March 24th. I believe that's it. And that had volume of 536. So Jack in the Box looking, it's like it's all jacked up. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So I had a couple of questions to take a look at some things. One was from Danny in Atlanta. He wanted me to take a look at the yen, and then Tammy wanted to take a look at the GDX. So actually, they all tie in together. In fact, they really tie into the markets as well. So we're going to look at a couple of different charts, different time frames, so that I can give each of you out there a decent roadmap for what it is that the markets are communicating to you and I as we speak right now. Now, this panel, this chart that we're looking at, set of charts really is what I should say. You've got 5 different sets of charts. Now, you've got the NQ is the left-hand side. 30-minute charts, by the way, is what we're going to start with. That's on the very left. To the right of the NQ is the S&P futures contract. To the right of that, or dead center, dead smack center, happens to be light sweet crude. Just to the right of that is Treasury bonds, and then to the right of that is the Japanese yen. Now, why are we looking at all of these? Well, the NQ and the ES, because I trade those actively. So that's why they're out there, and I like to understand what's going on with those correlating markets so that if things are off, because you like to, what I like to trade when everything is in synergy, and when it's not, then I just simply like to step away, listen to some music, wait for things to sync back up. In the case, so what we do know, good correlation between the direction of light sweet crude and the markets. If we take a look at light sweet crude, yesterday was a nice day. It looks to me like light sweet crude is breaking out to the upside. So assuming that correlation is there, and of course we're seeing nice moves inside of light sweet crude. Light sweet crude, by the way, has a nice A to B equals CD to the upside that it's trying to complete out here. I will add that in on the screen in a moment. I'm assuming, there we go. It's already there. The tool's already there. Here's the A to B equals CD pattern. Even though you didn't ask about it, it impacts the markets, or at least I believe that it impacts the market. So the one-to-one price projection is 42.65. So light sweet crude headed to 42.65, 43.25. It's got a little hurdle that it's got to overcome, 42.08. That happens to be on a 30-minute basis. It's brand new market profile that formed here in the past hour. But it's headed northward. We can see the ES and the NQ are doing the same. Now, the odd thing is that bonds were also moving higher. So after the Bank of Japan, of course, this is logical. So this is where your logic has to say, okay, I can dig it. I see what bonds are doing. I understand why. And so I'm not going to let that influence my trading with regard to the NQ and the ES. And you say, what's that? Well, the Bank of England reduces their interest rate. So where is it for those people that are parking lots of cash? Where is it that they're going to park that cash? they're going to park it in our treasuries out here, whether they're short-term dated or either high-end funds, bond funds, or certainly the 30 years. So all those things flow together out here. Now, of course, what we're seeing is after the aftermath of, okay, that's it, we're now starting to see, 30-year Treasury bond here pull back, at least do some type of retracement. So in this case here, so I understand the initial action. Now the reaction with regard to a pullback, it's actually somewhat bullish for the markets. Now, what influences the Treasury bonds more than just that logical thinking out there is really the Japanese yen. At least that's Stevie's belief, is that the currency pair is what's influencing the Treasury bond more than anything else. And that, too, is starting to pull back out here. So the direction of the Japanese yen futures pulling back, Treasuries are pulling back. All that makes sense. All this suggests that the equity futures contracts want higher price. That doesn't mean right at this second necessarily, but this is what the pattern is in play, and they want higher price out here. Makes all the sense in the world when we took a look at those rising price channels on the 120-minute basis, the larger descending one inside of the Dow, so we know what to be looking for. But the message here, and so with regard to what's the Japanese yen doing, I don't think that that's what Danny in Atlanta was asking for, but I want to give you the framework for that. I think that what Danny was asking for, and he'll correct me if I'm wrong, I'm sure, was, hey, what's going on with gold? Now, that's the segue into Tammy's question, which is, hey, what's going on with the GDX out there? So with regard to this chart here, now we're looking at three different panels. The top panel is a daily chart for the yen futures. The center panel is the gold chart. Now, it's the continuous contract. That way I can go back really far to the left. I don't have to worry about that. And the bottom panel is the 30-year Treasury. So what's the message here? Well, I think with regard to Danny's question, he just wants to focus on really the top two charts here. So what's the message for you and I? Well, and also for Tammy here. Tammy, the GDX, and you wanted to go short the miners out here, the first element that you're going to need, I believe, is you're going to need to see gold get below Stevie's red line. Now, that red line, you might say, well, geez, I can hardly read what that is. And I would agree with you. I can hardly read what that is. So I'm going to go ahead and put something on a different screen out here. I'm going to tell you what that number is that we're looking at. And in the case of gold, the number is, drum roll, please, 1355. Where is it? 1355.50. You at least need to see a close below that, because as long as price is moving higher, as long as the price oscillator is moving higher, that is not bearish at all. That is bullish. And so, I mean, that's just simply the meaning. So other than finding some way to sell a top tick out there, and maybe if we went to some shorter term charts, we could find that. This says here, caution. Caution Tammy, caution Will Robinson, caution anyone that right now at this moment is trying to short gold. And you're getting that confirmation, because of Danny and I. We're getting that confirmation with regard to the Japanese yen. We don't even see a failure out here. In fact, the Japanese yen is threatening. So this is good for the gold bulls. This is bad for the gold bears out here. We'll see when it happens. The Japanese yen is threatening to take out its little seventh wave move that was back on June the 24th out here. And if it takes out that high, which, by the way, that's priced at 0.0094. Again, this is the futures contract that we are looking at out here. Man, that says it's a powerful move to the upside. I don't know whether it's going to take it out or not. I know that as long as it's trading above that red line out here, that, that quite frankly, it's bullish for treasuries, right? We're looking at a 30-minute chart here. On a daily chart, the message is this. Remember, we just got to stay focused on the time frame that we are looking at out here. And at this stage, until we see that Japanese yen pull back, and therefore, now here's where you've got a little bit of a dynamic, right? Bonds, the 30-year Treasury, is in fact trading in what I will call negative territory, or territory where they want to pull back. So irrespective, is that even a word out there? Regardless, I think irrespective is. I think irregardless is not. But I basically suck at grammar, although I think I do pretty well here during the show. But I just don't want to take a grammar test necessarily. A Kelsey grammar test I can take, but other than that. But here's what we do know. Take a look at what bonds did earlier in the day. They got up and they tested and they smacked that red line, Stevie's red line out there. That's resistance, just as it can be support out here. So a little bit of a divergence, a little bit of a divergence here, in that the yen hasn't given us that signal, but treasuries most certainly have out here. So I hope that helps you out, Tammy. She's off for a great long weekend, or maybe it's JB, I don't know. And and hopefully that helps Danny in Atlanta. So I know that was like the long route. Oh, she did. And what also was requested if I would actually just take a look at the GDX. So let's do that. Let's go switch over here. And then let me give you the number inside the GDX. But I would wait for the signal inside of gold. Now, with regard to the GDX specifically, the number I would be paying attention to is in Stevie's red line, which has acted as support. You can see that all the way over the past couple of days here. That number is 3102. So 3102 is a number that I would be watching like a hawk out here. You see it close below that. It says, hey, maybe that does trade. But, man, you need to see both gold and silver. You need to see that price oscillator turn down to give you the type of confirmation I believe that you're looking for. Steve Rhodes with TFNN. Dow's off 10. S&P is flat. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I had a request to go take a look at December wheat, so let's go take a look at that. We'll use a couple of different tools to do that. So as we take a look at the December wheat futures contract, here's what we know. There's a brand new TAS profile that formed back on July 22nd, a brand new daily profile that formed on July 22nd. We also know that yesterday was at least a bullish reversal signal that got you back above the profile. So maybe a little short term. That was little bull sash candle, bullish engulfing. Really one and the same when we're taking a look at the futures contracts out here. So, but prices now today slipped right back below the bottom of that box. That bottom of the box is 434.3 out here. So that's what you want to be paying attention to. So you'd like to see it get back above that level, or you'd like to at least get some additional confirmation by maybe moving higher. Today would have been nice, Danny, for price to have moved higher today. Now, of course, we can also see here's the danger sign with regard to this is, prices also closed below a hammer candle. It did this over the past couple of days. And right now, the bottom of that hammer, this is on the trading session here from July 5th, looks to be acting as resistance, right? See that? See how yesterday's nice little bullish candle moved right into resistance. The very bottom of that, which was a bullish hammer candle, should have marked the bottom, was tested, was rejected for several trading sessions, July 20th, the 21st, the 22nd, and then finally gave way on August the 1st out here. So you've got a significant level of resistance. If it can get back above that, then it says that at least price ought to bounce up to the 469. The top of the box is the way that I would look at it. Now, with regard to is it forming a bottom, I would think that might be your question out there. And so let's go take a look at this chart. This is Stevie's personal chart out here. Right now, I'm looking at the continuous contract. I didn't have the December contract up on this element of my screen, but that's okay. It's really accomplishing the same thing for you and I. We can see that there was a nice high that was made back here on June 8th. Price was stretched. It was moving higher, doing less relative energy. Now, the beauty of yesterday's candle session, this is what you want to be watching for, is that from that high to the low a couple days ago, you got to wave number 7. So wave at me right now. Sing in the key of G. Stevie Wonder, do whatever. Why do we pay attention to those 7th wave? Well, we looked at it on the 5-hour chart, right, for the Dow futures. They can be where you can see the most significant reversals. Plus, price was moving lower with less relative energy out there. Beautiful bottoming signals, just as they are beautiful topping signals. You and I, we don't ignore those on any time frame, but we really need to know our Japanese candlesticks, which is what I'm going to be teaching a week from yesterday out here. And folks, I don't know if do you like TED Talks out there? TED Talks tell you, there's a great book out there, by the way. They tell you that you really ought to try to keep if you want to have an impact on someone's life, and trust me, everybody here at TFNN wants to be able to impact the lives out there, the folks that we're talking to. They say to keep your seminar down to about 18 minutes. 18 minutes is your entire time span out here. So we break our sessions right up by these commercials. It's really for your benefit, everybody's benefit. But I'm going to be doing 1 hour. So the real challenge is for me, I'm going to condense really a lifetime worth of knowledge that you need to know, just the best of the best, so that truly, this is going to be a workshop that you want to attend. So just go over to the homepage, it's TFNN.com, $49, you get my newsletter service and an amazing workshop. But Danny, you would now have wave 7 down here, and you had a nice little bullish reversal signal. You don't want to see that 7th wave session get taken out, but if you're looking for a bottom, it becomes an easy trade. It's just a couple ticks below the session from a couple of days ago. So I hope that helps you out with regard to December wheat, at least with regard to the way that I see it. So, folks, it is a terrific Thursday, sometimes referred to as Turnaround Thursday, but there's not much for it to turn around from. So stay tuned. Our man, the Polar Bear, he's going to be up next. And Tom is out of town, so I'll do hour 1. Basil's going to do hour number 2. And then we've got the Handy Heck Show from 5 to 6. Have a terrific day, folks, and we'll see you soon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.